Financial inclusion across the mostly cash-based economies of sub-Saharan Africa remains low, with nearly 4 in every 10 adults not having a bank account. But more importantly, 1.3 billion people across the world being without a bank account or any sort of digital transactional devices or ability to do so. What implications does this have on the global economy, and how does this disproportionately affect the African continent? We speak to the director of the African Center for Financial Development at Stellenbosch Business School, Professor Elizabeth Nanziri, on this now. Prof Nanziri, good evening. Thank you so much for your time. Really do appreciate it. Financial inclusion is a necessary and sometimes a sufficient condition towards economic inclusion. But is a bank account and transactability the only way to look at financial inclusion and or exclusion, or are there other indices and determinants that are important when we talk about financial inclusion and exclusion?
And thank you for having me. So when we talk about financial inclusion, there are usually 3 dimensions that we want to focus on, one of which you have just mentioned. So just having a bank account, that goes under access, right? So we talk about access of proximity to infrastructure, such as having, proximity to a bank branch. And with that goes having your bank account. We see that, or we measure access with, first and foremost, having your bank account. But that's not the end of it. We want to also check how frequently you transact, right? And then the other would be the quality of the services that you get. So proximity is just one. Those are the bank accounts. We have so many bank branches, but in this digital era, you realize that that measure or that dimension is almost fading away. Then comes frequency. Why don't you frequently transact? Which is one of the issues that were raised in the case of South Africa, where social grant recipients do have a bank account, but they just go and withdraw whatever has been deposited into their account. That does not work well, because then there's no flow, there's no liquidity in the system, because we don't know where they're keeping that money when they take it. Then the quality of the products probably that individuals have, that has also maybe fed into why transaction frequency does go down. So we do have 3 dimensions that we have to look at to start with, to measure inclusion.
Why is Africa still lagging behind, despite the continent, I would say, leading the world in fintech innovations? We've got a raft of innovative products and instruments on the continent. M-Pesa, I think, is a world-leading example of how technology can be adapted to improve financial inclusion. Despite all of that, why is the African continent still lagging behind, and how do we get rid of some of those barriers and impediments?
So when we look at these innovations, they should come to fit a certain purpose. That actually goes into that quality dimension that I mentioned. Do we have products that are fit for purpose, fit for use, or we just have products because they are innovators out there? And I think we need to get away from a supply to demand and move from a demand, to supply. So M-Pesa was able to flourish because there was a gap. And we should appreciate that other economies have different gaps that are not going to be maybe met by the M-Pesa type. M-Pesa type is also a collaboration, which is the one thing that we need to talk about. How flexible are our economies and the financial systems or sectors with collaborating, because that's a collaboration between the telecoms sector and the financial sector. And if we add e-commerce using digital payments, you're now moving towards the trade, departments or in sectors. So that collaboration is very important. And in some countries, it's non-existent, or the regulations are not supportive of such collaborations. And that is the first challenge. Regulatory frameworks.
Now, the G20 Heads of State Summit is taking place this weekend, where the world's leading economies are meeting. If anyone could solve this, it would be the world's leading economies. What are some of the questions they need to ask themselves?
Right, so in this case, we're talking about maybe digital financial services, we can enhance them. How do we do that? Investment in technology, that is fintech we're talking about. Leveraging what we have, there are some innovations already, but how about the regulations that are supposed to, drive that kind of agenda? So we need to ensure that there is an enhancement or supportive environment in terms of investment and in terms of innovations. Along with that, streamlining the regulations such that we do have these seamless cross-border financial systems. We're seeing a lot of cross-border banks moving. So let's leverage that and make sure that the regulations are harmonized. And along with that, ensure that there's consumer protection, because that is also important.
Absolutely.
And add to that financial literacy, financial education, which is missing and has missing for a while.
Yeah. Prof Nanziri, I'm going to have to leave it there. Thank you so much for your time. Thank you so much for your insights. Really do appreciate it. That is Professor Elizabeth Nanziri from the Stellenbosch Business School.